What is the next big short? What could trigger the next financial crisis? I'll cut to the signal, not the noise. The setup: global growth is slowing, down to 2.3% in 2025, weakest since 2008 outside recessions. World Bank, 2025, debt is at record highs. Trade tensions are sticky. Inflation lingers. Policy is uncertain. IMF, 2025, JP Morgan, 2025. Here's the uncomfortable truth. Crises are predictable. When credit surges for 3 years, and asset prices surge for 3 years. Crisis odds jump from 7% to about 40%. Greenwood et al., 2021. Translation: boom-bust cycles still run the show. What breaks first? The illusion of risk-free assets. Years of ultra-low, even negative yields. $6.5 trillion at the peak. Mises Institute, 2025. Pensions, insurers, funds, incentives warped. When policy tightens, these safe assets become duration traps. Markets addicted to liquidity. VAR models fail when everything sells off together. Correlations: 1. Exits get crowded. Small shocks become system shocks. Trade war escalation. Tariffs. Frictions. Costs. Growth. On JP Morgan 2025, monetary tightening. Rates. Balance sheets. Liquidity dries. IMF 2025, debt overhang. Sovereign and corporate defaults ripple. World Bank, 2025. Asset corrections, real estate, equities, sovereign bonds reprice. Greenwood et al., 2021. So what is the next big short? It's not a single trade, it's a theme. Short hedge long duration sovereign debt where yields misprice risk. Mises Institute, 2025. Position for liquidity evaporation. Spreads gap, correlations spike. Watch where credit and prices ran too hot. Business or households. Greenwood et al., 2021. Timing matters. Central banks can delay or accelerate the reckoning. Policy can stretch cycles. It can't repeal math. What am I tracking right now? Yield curve steepening from policy repricing. Auction stress, widening bid-ask in sovereigns. Funding stress, basis, repo, commercial paper cracks. Credit income, classic boom-bust tell. Greenwood et al., 2021. Respect liquidity risk, size small, prefer optionality over leverage, diversify by risk regime, not headlines, expect coordinated policy, then the market tests it. If inflation falls and growth stabilizes, bond risk eases. If trade cools and cooperation returns, volatility compresses. IMF 2025. But with growth slowing and recession odds southern 40% into 2025, fragility remains. JP Morgan 2025. Bottom line, the next big short targets the myth of riskless duration and the comfort of perpetual liquidity. Crises don't come from nowhere. They come from the last boom's excess. World Bank 2025, IMF 2025, JP Morgan 2025, Greenwood, Hansen, Schleifer, Sorensen 2021, Mises Institute 2025, Yale, YPFS 2020, sponsored by www.laprouve.com, producer of Cacao Norte Sur from Mexico, Endurance Fuel, craft cacao and coffee, responsibly sourced. Explore more at laprouve.com. Analysis and retrospect used AI. It's not perfect, but offers a wider view. This is educational, not financial advice. Also, this is not medical advice. Do not do it at home. Like for deeper dives. Subscribe for next scenarios. Thanks for watching.